Welcome to this episode of Fridays with Fintelekt, where my guest is Claire Wilson, an independent consultant based in Singapore, who has had a very interesting career spanning management, consulting, regulatory, academic, and government roles. The focus of our discussion today will be cryptocurrencies and virtual assets, which is a very, very hot topic of debate these days. So, Claire, thank you so much for joining us today.
It's my pleasure to be here, and thank you very much for the invitation.
So, Claire, at the outset, can you give our listeners a quick overview of your professional career so far and how you got involved in the world of virtual currencies?
Yeah, sure. So in terms of my professional career, I started out in the UK, and after law school, I worked as a legal assistant for a commercial law firm. Later, I moved to Hong Kong, and eventually I worked in-house for an American insurance company in a broader role. So I became involved in business operations and gained exposure to the Asia Pacific region. And this was during the 2009 financial crisis. So it was an incredible time to be in that space. After this experience, I remained in Hong Kong to complete my doctorate, and I focused on the legal basis of bank secrecy. I also became involved in academia, working as a law professor, and eventually became the Dean of the Law and Business School. And at the same time, I served on 2 government tribunals to hear inland revenue appeals and professional misconduct cases. So in January 2020, I relocated here to Singapore. And as you mentioned, I'm currently working in the consulting space. So how did I get involved in the world of virtual currencies? Well, I discovered Bitcoin in 2013, and I was curious to understand more. So I learned how it worked through a friend of a friend, and he showed me how to open a wallet and make transactions. And then I also started to research Bitcoin and blockchain from an economic and legal perspective. And I introduced all of my findings to my lectures. My students were wonderful. They were really open-minded, and it was really well received. So we had a lot of fun discussing. And then I started to speak at other venues and had the opportunity to present my research at other universities and conferences around the world. So I've also published articles and book chapters, and they mainly focus on regulatory issues.
Excellent. So, Claire, in 2019, you published a paper titled Cryptocurrencies, the Future of Finance. Can you walk us through some of the key findings of your studies? And also in that paper, you had written, and I quote, cryptocurrencies are a promising new innovation. However, they are neither fully understood nor fully matured. There is no doubt, given the vast pace of innovation and increasing levels of research, that the cryptocurrencies of the future will be far more advanced than the current generation, unquote. So can you also speak about some of the major developments in cryptocurrencies and virtual assets since you wrote that 2 years back?
Yeah, sure. I'd love to. So first, just let me tell you a bit about my research. So it's very different from my other work, which is predominantly analytical and concept-based legal research. But that was the intention. I really wanted to do something different. And although I was a law professor, I was also fascinated by economics, technology, and innovation. And I didn't want to be constrained. But I also wanted to present a balanced study. I was a huge believer in the potential of crypto. But at that time, as you can imagine, crypto was still receiving a great deal of negative publicity. And that was largely due to crypto hacks and other frauds and scams. So I initially presented the paper at a conference in Hong Kong at the end of 2018. And then after a little bit of fine tuning, it was later published by Palgrave as a chapter in a book that's called Contemporary Issues in International Political Economy, edited by Professor Tony Yu. So in terms of methodology, I carried out a SWOT analysis. So my research evaluates the strengths, weaknesses, opportunities, and threats that crypto poses. And as you said, I actually concluded that there are more strengths and opportunities than weaknesses and threats, and that crypto would be a massive disruption to the future of money. So my 3 key findings were that the future generation of crypto would, first of all, be more advanced than the current generation. So for example, they'll solve scalability issues. I also predicted that they would be heavily governed by regulation. And thirdly, that state-issued crypto would become more dominant. So I kind of cringe a little bit when I read it again, because there's been a significant amount of development since my publication. So for example, there's developments with to deal with Bitcoin transaction speed and the volume of traffic. There's also significant developments within the financial industry, such as the emergence of Bitcoin exchange traded funds, which I would never have anticipated. So in some respects, the research, even though it was published in 2019, is already dated. I mean, you'll see that when I talk about the prices. I became very excited because Bitcoin was around 6,000 US dollars, which sounds ridiculous today. But that's the nature of this space. You know, it moves fast. The concepts still remain the same though. So the paper's online, so it's free to download. So to the listeners out there, please feel free to read it. And I'd be happy to hear your comments too.
Fantastic. So Claire, large institutions are now investing in Bitcoin or have, announced plans to do so. So whether it's Citi or Fidelity or Goldman Sachs, what impact do you think this is likely to have on the cryptocurrency ecosystem?
Yeah, that's right, Shirish. There's been a huge surge in reports that the world's leading institutions are investing in Bitcoin. Some commentators in the space have touted 2020 as the year that Bitcoin went institutional. But I do think that we need to be very clear about what we mean when we say that institutions are investing in Bitcoin. So let's take Fidelity as an example. So in 2018, Fidelity launched a separate entity known as Fidelity Digital Assets to operate a platform. So we have Fidelity Charitable that accepts Bitcoin and other crypto as donations. And then in August 2020, a Bitcoin fund called Wise Origina Bitcoin Index Fund was launched. And this provides service to accredited investors. And then fast forward to December 2020, the Fidelity team teamed up with BlockFi to allow Fidelity's institutional grade investors to pledge Bitcoin as collateral in a transaction. So a US dollar loan can be offered to these clients holding Bitcoin as collateral in custody accounts at Fidelity Digital Assets. So this service is really targeting the investor who wants to turn their crypto holdings into cash without selling. Now, of course, more recently, we've got Fidelity International injecting substantial amounts of liquidity into Hong Kong's BC Technology Group, which incidentally supports the first licensed crypto exchange in Hong Kong. And according to regulatory filings in January 2021, Fidelity International held a 6.29% share in the BC group. So you see, the investment of the group is part of a wider strategy for Fidelity to actually position itself as a leader in the crypto market. So just as you can see from this example from Fidelity, yes, the large institutions are investing in Bitcoin in a number of strategic ways. But it's not that they're simply buying Bitcoin and hodling it. Now, I do believe that the rise of the large institutions' involvement in the crypto space is highly likely to have a significant impact on the crypto ecosystem. Now, it certainly increases the awareness of Bitcoin and other cryptos. It gives crypto legitimacy. People are starting to think, well, if the big banks believe in Bitcoin, then why shouldn't I? So will the demand for Bitcoin outstrip supply? Well, there's only 21 million Bitcoins, my apologies. Some believe it will. In my opinion, this is just my opinion, I think that we are going to see a crypto rush over the next few months, perhaps year. Because there's more consumer confidence and the fear of missing out as well, that will drive the desire to acquire.
Right. So, moving to the regulatory side, I think the key concerns amongst regulators revolve around the loss of value for retail investors due to market volatility, and also the potential for misuse by illegal actors. And many countries have banned cryptocurrencies altogether. So what do these countries stand to lose by disallowing the use of crypto?
Mm. So I think, first of all, in my opinion, governments are right to be concerned about these issues. They're serious issues. So let's take volatility first. If we consider the fluctuations in the price of Bitcoin, for example, on 26th of December, around then, one Bitcoin was just over 24,000 US dollars. Now today, it's kind of hovering around, the 52, 54 USD mark. So, and that's 52, 54,000. Now that's an increase of almost 30,000 in just 3 months. So, it's a real concern. And the potential for misuse. Well, we've seen a string of crypto-related crimes over the past few years: hacking, theft, fraud, scams, crypto misappropriation. So they're right to be concerned. But in my opinion, banning Bitcoin or other cryptos, that's not the correct approach. Banning it won't stop the volatility, and it won't stop it from being misused. So retail investors, misusers, whatever, they can still find a way to access crypto, even if it is banned. Exchanges can move to crypto-friendly jurisdictions that they can get a license there. People can still use it at their homes. So I know there's been some discussion, well, we'll block the IP address. So what? They can get a VPN to access the IP addresses. And what? They can store the crypto on a cold wallet or on a wallet licensed in another country. So I don't personally think that is the way to go. I think there's better solutions than banning. So with regards to managing the vulnerability of retail investors, in my opinion, I think that education is the answer. So personally, I'd like to see more being done by governments, being done by financial regulators to educate our public, educate them on the characteristics of crypto, and also how to manage their financial affairs. Preventing misuse, well, develop clear legal frameworks with proper AML monitoring and screening procedures.
Right. And, what about the governments who are on the fence, right? Neither banning nor allowing, would your advice to them be similar, or would you say something else to them?
Yeah. So again, I'm going to sit on the fence here. I appreciate why the governments have sat on the fence in the past. Crypto, it's still a relatively new concept. It's not easy to understand, and it's completely different from anything that we've seen before. It's not easy to regulate. So, for example, differentiating between the different types of virtual assets and figuring out how they should be regulated, it's not an easy task. If we consider the Financial Action Task Force, for example, we've just seen a revision, proposed revision in March to the guidelines. Now, that proposed revision, we're talking about stable coins. This is something that's been in discussion for a long, long time. So, if we can't get it right at a institutional, organizational level, then how are we going to get it right as individual governments? So I understand, I see why, but I think those arguments now, they're kind of wearing thin, and I think now is the time that governments do need to act. Now, cryptos are not going away, and governments need to put in place a clear legal framework. So what's the best way for governments to proceed? Well, it is a balancing act. So they need, in my opinion, to allow sufficient crypto activity because it does fuel innovation. I mean, if we think about some of the central bank digital currency innovations, they've actually been watching what has been happening in the crypto space. They would have never come about if it wasn't for Bitcoin, and if Bitcoin weren't allowed to actually go ahead. So I think we do need to consider that. Governments were only in that place now because of past innovation. But at the same time, Governments also need to ensure that frameworks are put in place to prevent any nefarious behavior, and particularly around money laundering and terrorist financing. So if you allow it and if you regulate it properly, then you can keep a closer eye on what's happening. So the Financial Action Task Force, it is an intergovernmental organization that provides guidance to countries and recommendations as well on how to deal with crypto. Incidentally, they merge crypto within a group called virtual assets. And so we've had a definition recently around, what is a virtual asset, which again, has helped countries to define what they are. And so the general advice that's given by the Financial Action Task Force is to adopt a risk-based approach to both virtual assets and also the virtual asset service providers as well. So, we're seeing countries like Japan, here in Singapore, they've demonstrated that it is possible to regulate and to keep abreast of those challenges. So there's plenty of reference material out there for governments to analyze and modify to suit the peculiarities of the needs of their country.
Right. So, Claire, the Fintelekt community consists mainly of compliance officers around the world. What is your advice to them? How should they protect their banks or institutions from the risks emanating from cryptocurrencies or virtual assets?
Yeah, great question. And I think there's a lot of concern among legal officers and also general counsel and also compliance. Compliance is a growing profession, but this is a very new space, and again it's also a growing space, and it's also a rapidly evolving space. So with regards to your question, so I've just got 3 simple tips. So the first tip is I'd take the time to put in place robust customer due diligence and KYC systems and procedures. And then also make sure that your customer due diligence is refreshed frequently. Second, ensure that you and your team are well educated on crypto. That includes also paying attention to what's happening in other jurisdictions. I know it sounds crazy, but we can learn a lot to actually what's going on around the world. So some of the key jurisdictions to look at are, of course, the US. They're driving a lot of the regulation. Also Japan, early adopters of regulation. And I'm going to be a little bit biased here and say Singapore as well. There's a lot going on here. And then, you'll need to keep up to date with the changes. It's a fast-paced space, so you'll need to put the time in. And, I understand being a compliance officer is a very busy profession. So if you don't have the time to put in the research, then you can always hire someone to deliver training for you. So finally, team up with other compliance professionals to share your good practice and problem solving. I'll just give you an example here. I moved from Hong Kong over to Singapore, and in Singapore, there's a group, and it was set up by Chris Holland from Holland and Marie, and he allows legal and compliance officers to share their news, pain points, tips. So I actually find out a lot of hot news on this channel. And again, it's a good opportunity for compliance officers as well to ask, hey, how are you guys dealing with this? And the group are very receptive and also very supportive. So we're not seeing this kind of competitive. We're seeing this support for our mutual pains. So that's a powerful resource. So to other jurisdictions out there, I'd highly recommend putting something like that in place.
Great, Claire. Thank you so much for joining us today. It was fantastic speaking with you.
My pleasure, and thanks for having me. Have a great week.